So last week at 188, I told you guys that if Nvidia, ticker symbol NVDA, could not stay above 183, then look for a pullback down to 180. Take a listen. Next, we have Nvidia, ticker symbol NVDA. So currently, Nvidia's main level of support is going to be at 183. If the stock cannot stay above this level, then I want you guys to look for a 4% pullback to 180. And looking at the current chart, you guys can see that Nvidia did fail to stay above 183, and as a result, we did see that pullback down to 180, like I predicted. Now, in that same video, I told you guys that if ticker symbol AVGO, Broadcom, could not stay above 352, then look for a pullback down to 340. Take a listen. Let's begin with Broadcom, ticker symbol AVGO. So currently Broadcom is up over 9%, breaking above resistance at 252. With that said, this is going to be our new level of support. So if Broadcom cannot stay above 352, then I want you guys to look for a 4% pullback down to 340. And once again, you guys can see that my analysis was 100% accurate. Now let's go ahead and take a look at the S&P 500. So currently you guys can see that the head and shoulders pattern is taking shape. And if we do see this pattern play out, this should take the S&P 500 down to 631, which from current price, we would be looking at a pullback of over 5%. Now, I would like to add that this pattern is quite obvious, so don't be surprised if the market invalidates it with a move back to all-time highs at 674. Now, if the S&P 500 does break above this high, then I want you guys to look for a run to 683. And above 683, if we do get a blow off top, I want you guys to look for a run to 692. And from current price, we are looking at an increase of over 4%. With that said, I'm still overall looking for a pullback down to 574 and then a pullback down to 532. And in total, we're looking at a decline of over 20% in the S&P 500. Now on Friday, Tom Lee says that private credit concerns does not change the market's long list of tailwinds. And by tailwinds, I can only imagine that he's talking about the AI story. With that said, let's go ahead and take a listen to what he had to say.
Joining us now is Tom Lee. He's FundStrat's head of research and a CNBC contributor. It's good to see you joining us from the nation's capital today. So what's your take on everything that we are talking about now daily?
Well, I heard the earlier segment, Scott, and I do think I'm kind of more in the Jamie Dimon camp, you know, that and Steve Leisman's point that there's opacity in private credit, and that's the problem that investors are going to grapple with for some time. And I think that, along with the trade tensions and, you know, the VIX spike, is the reason investors are a little cautious. But I don't think that's going to change that markets still have a lot of tailwinds into year end. And part of it is AI is like, I think demand is accelerating there. And we know that investors are sitting on a lot of cash, and institutional investors are really having a terrible year. Only 22% are beating the benchmark. So I think there's a bit of a chase. And then sentiment has flipped negative, which is always a contrarian buy signal. So, you know, I think despite this mounting wall of worries, including the shutdown, I think it sets us up for a pretty good rally into the end of the year.
It sounds, though, like this is enough on your radar that do you think it's at least changed the game in the near term for the market?
On the private credit?
Just overall, I mean, if there are continued issues in private credit and the leveraged loan market, then the stock market's not going to take that well. I mean, you wouldn't think.
Yeah, I mean, Scott, the only thing that I don't know is how many chapters it's going to take to play out, because, you know, I mean, there's opacity, which is what is scaring people, but then there's real credit deterioration, which I don't think that's what's happening, and I think that's why Adam and all those had called it idiosyncratic. I'm kind of in that camp because high yield spreads have behaved. So I think it's more of is the flow of capital, because I think one of the biggest sort of allocations for alternatives has been private credit. It's going to make investors pause that, you know, maybe this market it's not as easy a return as it looks.
You told me, I think, a couple of weeks ago that 7,000 on the S&P by the end of the year was realistic. You still think that we could get another 5%? That's what it looks like. It's 5% between now and then. Do we have that in us?
Scott, I mean, 5% is just an average fourth quarter from 1950 to 2024. But we have the Fed easing after an extended pause. So that's 1998 and 2024. So I think that 5% might be the base case. I bet you it's going to end up being more like 7 or 8% or even possibly 10%. So I think 7,000 is the low end of what we could end the year at.
Wow.
Now, going into the rest of the video, here's some important levels to watch on ticker symbol SOFI, SOFI Technologies, Applied Digital, ticker symbol APLD, and the trade desk, ticker symbol TTD. Let's go ahead and begin with SOFI Technologies, ticker symbol SOFI. So looking at the current chart and this trend line, you guys can see that SOFI is in a downtrend. Now, if the stock cannot stay above support at 26.50, then I want you guys to look for a 4% pullback down to 25.28. And if 25.28 failed to hold as support, then look for a pullback down to 24.30. And if the stock falls below 24.30, then we're looking at a further pullback down to 22.90. Overall, to the downside, I'm looking for a pullback down to 20.24. And from current price, we are looking at a decline of over 23%. Now to the upside, as long as SOFI can stay above support at 26.50, then I want you guys to look for a 4% run to 27.70. And if the stock can break above 27.70, then look for a run to 28.82. Above 28.82, the bull's next target is going to be at 29.90. And from current price, we're looking at a return of over 12%. Next is Applied Digital, ticker symbol APLD. So overall, I am bearish on the stock and I'm looking for a 9% pullback down to $31. And then a 28% pullback down to $24.37. With that said, during the market's last trading session, Applied Digital was down over 6% and is now sitting above support at $33.84. If buyers cannot keep the stock above this level, then I want you guys to look for a 9% pullback down to $31. And if that level breaks, then we're looking at a pullback down to $27.96. Below $27.96, the bear's next target is going to be at $24.37. Now to the upside, as long as Applied Digital can stay above support at $33.84, then I want you guys to look for a 14% run back to all-time highs at $39. Next, we have the trade desk, ticker symbol TTD. So overall, I am bullish on the trade desk with my price target being at $76 per share. With that said, keep your eyes on these levels. So current support for the trade desk is going to be at $49. If the stock cannot stay above this level, then I want you guys to look for a 5% pullback down to $47.55. And if that level breaks, then we're looking at a pullback down to $46.22. Below $46.22, my next price target to the downside is going to be at $45.12. And from current price, we are looking at a decline of over 9%. Now to the upside, before I do give you guys the levels to watch, I do want to point out that the stock is forming an inverted head and shoulders pattern. And for those not familiar with this pattern, it usually plays out like this. And to get your overall breakout range, all you got to do is measure from this low all the way up to your neckline. And that should give you a price target of $69. With that said, if the trade desk can stay above current support at $49, then I want you guys to look for a 2% run to $51.40. And if the stock can break above $51.40, then look for a run to $54. Above $54, the bull's next target is going to be at $56.70. And from current price, we are looking at a return of over 13%. Alright guys, if you liked today's video, go ahead and leave a thumbs up. And if you're currently watching and you are not yet subscribed, do consider subscribing. As always, thanks for watching, and I'll see you guys in the next one.